You think the Fed should pause. Why?
Yeah, I do think they should pause for a few reasons. One is I think we're in the early stages, not the late stages of this banking situation. I think there's been a pretty significant change for the prospects of small and mid-sized banks. They provide most of the lending to small, mid-sized businesses in the United States. And we've just seen the first phase of this, which is the asset-liability mismatch, which is sort of the most obvious issue. But the credit issues are about to start. And I think that's why you're seeing the reaction in the markets. The other issue for me is, from a risk management point of view, if I were sitting in the seat, I think it's more important to be able to sustain the current rate for an extended period of time, longer than the market thinks, than get another 25 or 50 basis points and risk having to cut again. I think that would be very troubling. And I'd say one more comment. If I were at the Fed, I'd call out that we need a whole of government approach to fight inflation. Right now, the Fed is saying, we've got this, we can solve it. I don't think that's the case. I think you need fiscal restraint. I think you probably need to look at other policies that are outside the Fed. And so I would pause here.
Okay, but right now you've got it still pretty much priced in to do a rate hike on Wednesday.
Yes.
25 basis points. Why not? If inflation is still high, why not do one more to sort of put a cap on all that you've done and signal, you know, and thinking of inflation expectations as more signal that you're still hawkish when it comes to inflation. You've just got an eye on this banking, whatever you want to call it.
So this is my preference. I would prefer to do what's called the hawkish pause, not raise, but signal that we're in a tightening stance, because I actually think the banking situation may well be more serious than we currently understand it, and I'd like to turn over a few more cards rather than regret not doing that 3 months from now.
Okay, put on your former Goldman Sachs vice chair hat. If you were advising a desk, a trading desk, an investment desk, what do you think the risk is now? Have we not seen the end of it? It seems we know that there's shorts out there, or we know people are nervous, but is there fundamental risk right now that could keep this small and medium-sized banking turmoil problem going?
Yeah, normally when we're discussing problems with banks, it's after we've been through a credit cycle. We haven't even started the credit cycle. We've just had an asset liability mismatch issue where banks were overinvested in long-term treasuries, and bank equity has been marked down just based on that. We've got the credit issues yet to come. We're at a different stage in the cycle, and there's also potential deposit instability down the road when those credit issues start to unfold. And so I would say we're in the second or third inning of this situation, not the first inning, or seventh inning, I should say. We just finished the first phase potentially, but there's a lot more to go. The credit phase, I think, normally is more serious.
Robert, on your point about pausing at this moment, you don't expect that there might be the risk that if you pause at this level, that you might be forced to hike again, like we saw with Australia? And what is really more detrimental to credibility at this point?
Yeah, so I think there's a way to position this. And let's say they raise, then pause, or they pause and signal so-called hawkish pause. Either way, the rhetoric needs to be that the Fed stands ready to raise rates. All you're doing is we've raised a lot very quickly. We want to absorb and digest some of it. I think people will understand it, think it's prudent, but signal we're prepared to do more. And I think the markets will understand that message if they give that message.